Is Bitcoin in trouble, or is this just normal bull market behavior? Let's discuss. So welcome back to Upside Down Data. Let's talk about this recent pullback we've seen with Bitcoin. A lot of people have been getting scared. In fact, a lot of people have even started to say that this is now the top, and we're going to go into a long, protracted bear market, go all the way down to these low levels that we haven't seen for quite a while. There's a lot of fear entering the market, but I want to talk about this both from a historical perspective of, should we really be worried that Bitcoin is down currently from the highs about 8% and its max drawdown is about 11%, or is this something totally expected? So we're going to talk about a historical perspective about this, also look at some of our models and what they're seeing and whether or not they think this is actually potentially problematic or not. So let's get into it. So the first thing I want to talk about is that historical perspective. So here I've just drawn on the Bitcoin chart some other drawdowns we've already seen in this bull market. Then I want to go back and look at prior cycles and see how it compares to those. One of the things you'll notice actually is in the more recent Bitcoin price behavior is that it actually didn't see very many massive drawdowns for a while. Really, the last more major drawdown we saw was all the way back in January of this year. And then since then, it was more or less up only. We really just had this one big liquidation candle here where a bunch of leverage or people basically borrowing Bitcoin to bet on the upside getting liquidated. And that basically led to this overall almost 15% drawdown. And then we've now seen this other one about 11%. But if we just go back and look earlier in 2023, really coming off the bottom here, we had a 22% drawdown, almost 20% drawdown, and then here another 22 about percent drawdown here. So we've seen so far, it's really nothing in comparison to what we've already seen. If we look back at this and just say, oh yeah, this was a bull market, this is really not unexpected from that perspective. But more importantly, if we just go back and look at prior cycles, this is also very in line with what we've seen in the past. Let's go ahead and look at 2022. Coming out of the lows here in March, we had multiple drawdowns of 20%, 16%, 11%, 10%, 31%. This just tends to happen in bull markets. You have periods of expansion, legs up, and then the market has to digest those moves. And part of that digestion can be these drawdowns where it gets overextended in the short term, people take profit, leads to some selling, maybe some leverage getting wiped out of the system, which causes more forced selling. And you see drawdowns happen. But then the demand comes back in, steps back in, and you go further up. And if we go back even to the 2017 cycle, and this is a cycle that is often considered to be one of the more immaculate of Bitcoin, one of the more beautiful parabolic price moves that Bitcoin ever saw during the ICO mania, so the initial coin offering mania. Basically, a lot of different projects were raising funds by selling tokens when they were launching, and there's a huge speculative fervor that happened around that. Bitcoin ended up being the medium exchange for a lot of those, where people would trade out of those assets into Bitcoin, so it really got pulled up along with it. But even in that environment, which was super beneficial for Bitcoin, and it really benefited from that type of environment, it had massive drawdowns along the way. 40%, 26%, 40% again, 35, 32, 39, 39, 30. Massive drawdowns along the way. And so when you're looking at a bull market, it's really easy to just think that it's up only, and literally that means that just every day it's going higher and higher and higher. That's simply not the way it works. And really, that's not the way that it should work. If it was just up only, it'd be way too easy. The way that markets behave, they don't make it easy for you. They're always going to be giving you fear. They're always going to do things like these drawdowns that make you get really worried and say, oh no, why is this happening? I better sell now before things crash. And then that oftentimes ends up being the worst possible time to sell before you continue moving up. So obviously, I'm not presenting this as financial advice. You should make your own opinions, navigate the market way that you see best fit. But I just want to first give a historical perspective. That we're seeing right now is not unusual or unexpected at all. And so I personally think it's way premature to be having people, for example, say that this is now the cycle top and we're going to go off into a bear market. I think it's way too early to be saying anything like that. And in fact, this drawdown wasn't even surprising. So one of the things I posted over on Twitter back a few days ago, back on the 10th, was that one of our models, as I'm going to pull up here in a second, the trend confidence indicator, was starting to indicate some concerning signs. It basically was suggesting some weakness in the Bitcoin market, suggesting in the short term there might be some consolidation or pullback that might need to happen. And that's what we're seeing. And so even from that perspective, from a data-driven perspective, which is the way that I prefer to navigate the markets, I don't like to think about emotions or what influencers are saying. I like to follow what the objective models and data are telling me. it was not surprising at all for me that Bitcoin decided to have a correction here. So this is a trend confidence indicator. This is available on our website, claritydigital.io, link in the description. And basically what it's doing, so it's a trend model, as the name implies. And the way you want to interpret this is, how is it behaving relative to the price of, in this case, Bitcoin? So if the TCI is trending up, that's a good sign, and that can often mean that an uptrend might be forming, and that's what we saw here. But then when the TCI starts trending down, that suggests this weakness is starting to come into the market, and that any upside remaining might be relatively limited, or there might be some corrections that are coming, and that's what we saw here. But then as it started moving up again, that was again indicative upward movement in price likely to be coming. Indeed, that's what we saw, all the way up to new all-time highs. But then when we saw the TCI stop moving up with price, we saw it have its high here when price continued to move up. So basically the TCI not putting in higher highs, but price continuing to put in higher highs. That was a warning sign suggesting that this uptrend was weakening and we should be maybe a bit vigilant, or at least think that it wouldn't be surprising if we saw a correction or some drawdown. And that's indeed what we saw. Now we now see the TCI aggressively moving to the downside. So in the short term, what I'd like to see is the TCI to be able to regain its footing and be able to start trending back up, like we saw, for example, here, here, or over here, or over here. Basically, oftentimes before that next leg up, you like to see the TCI start moving up as well. So we're gonna have to watch and see how that all develops, but this was not short-term surprising. And I think that's really important. Historically speaking, it wasn't surprising, and even just from a data-driven perspective of what was currently going on, it was not surprising that we saw this. I think that's an important context. Another thing that also made it not surprising was what was going on with some of our risk models and what they were seeing. So this is our short-term upside downside potential indicator. So it's short-term in that it cares what moves to play out over days to weeks. So relatively short-term in its time horizon. And it's a risk model. And basically risk, what we're talking about is, has the asset tapped out its realistic upside potential? Has it kind of exhausted that realistic upside, or gotten as far as it likely is to get to the upside in a given point? And then is the downside potential really outweighing any remaining upside potential that's there? So generally speaking, when you're high on this model, that's just high risk. That means that the upside potential that's remaining is limited, but the downside potential that's there is quite large. And you'll see it does this great job of capturing these peaks, these tops in the markets when things get really elevated in risk. When the upside has been tapped out, a lot of downside remaining, then that can lead into these really nasty bear markets. When we look at where we are right now, though, I don't think it's the case that we have to think that where we are right now necessarily means we have to be going into any sort of bear market, or that this was the top. One of the things you'll notice is that in the past, on the short-term UDPI, you can get up to these relatively high levels during a bull market, having a reset, and then allow the trend to continue. So we did get pretty elevated here, right? We got all the way up to above 2, sort of like we did back here, for example. But then what might happen, and what I would actually really like to see happen for Bitcoin, is to see this reset, to see this come all the way back down, like for example we did here, which could allow for another leg. And then that could just allow the market to continue. What you don't want to see is you getting really high up here way too early in a cycle, because that might just mean you just blow up everything too quickly. Everything is way too overextended, and then things just fall off and you have a massive correction that can't ever really be recovered from when you go into a deeper bear market. What I'd like to see is healthy dynamics where we have these expansionary periods, but then we have the cool off period, let risk reset and then move back up. So from that perspective, I'm actually quite happy that Bitcoin has had this recent correction, because it means it's going to give a chance for risk to reset. And so I'd like to see this actually either, even if it has to continue correcting or just consolidate at these levels, either of those should allow for its risk to reset. That would be a good sign. And this goes for not just the short-term risk, again, that's carrying what moves that play over days to weeks, so much shorter in its time horizon, but also our long-term upside downside potential indicator that cares about moves that play out over months, multiple months, much longer in its time horizon. That has also gotten relatively elevated to similar levels we saw, for example, back here in 2019 at this local top, and the local top here, here, also over here, and here. Kind of similar to these different kind of mid-cycle moves that we've seen in the past. And so it'd be a similar thing. I don't want to see the long-term UDPI get up to these super high levels, because that might mean that we're getting actually closer to that cycle top. I like to see it do something like it's done in the past at these points, even in the middle of these parabolic moves, where it gets up fairly elevated and then it cools off. It comes back down, resets, allows for that next leg up. So something like we saw in 2017, for example, come up, reset, come up, reset again, maybe ideally even deeper before you can continue moving higher. So that's, again, something that I would personally really like to see Bitcoin do at this given point in time. And again, if we see more consolidation, more correction, that should allow for that to happen. So it's not surprising given these risk levels. These have often marked local tops, and it's an open question of how deep or long of a correction we need to see. But ultimately, in the long term, it's a good thing for the market. It's a healthy dynamic. So again, not financial advice, you should make your own opinions, but that's one of the things that I'm seeing here, where I'm personally not seeing this as a bad sign or something that's making me think we're just going to go right into a bear market. I think this could just be healthy market dynamics, allow risk to reset for us to go for another leg higher. So the final model I want to talk about here is our momentum bias indicator, or MBI. So this is a model that cares about momentum, as the name implies. And the thing I really like about this is it has very distinct types of behavior at different points in the market cycle. So in a bear market, you'll spend the majority of the time down here in the red below zero. So this would be where negative momentum is really dominating, or the momentum is biased to the downside. And then in bull markets, you see the opposite, where the momentum is biased to the upside, just really dominates the upside and really pulls price up with it. Then you have these transition periods where you just kind of oscillate around zero that ultimately builds into that bull market. And when you look at the most recent cycle, we had the bear market very clearly showing up on the MBI. You then had this adjustment period, this transition period into the bull market oscillating around zero. And now it looks like we're turning into more of this bull market behavior. We're going to be going up to much higher levels of momentum bias, and we're going to maybe be able to sustain these levels for longer and maybe just have these temporary dips back down into the red to ultimately build into whatever the actual cycle top could end up being. So we'll have to watch and see how that plays out. But so far, this looks quite a bit like prior cycles. There's not really a lot of warning signs I'm seeing here right now. Now, if we did something like this, where we come way down into the deep red all of a sudden, that would be maybe a sign for concern. That might suggest that this is a warning sign. Maybe we're broken off of that bull market footing and things might look different. We certainly haven't seen anything like that yet. So at some point, obviously, we'll have a top. And, you know, it's possible that the people calling this the top would end up being right. But personally, when I look at the data, I don't see that as being my base case. And that's why it is not. Now, obviously, it's up to you to navigate things that you see as best fit. That's not advice by any means. But from what I'm seeing across these different models, I'm not seeing a top picture just yet. I'm seeing a market that did get overheated in the short term, did have a weakening of its trend, where a healthy reset is quite good for it. That I'm absolutely seeing. And so the possibility of this correction going deeper or lasting for a while, having some consolidation, that's not something that's off the table by any means. And in fact, I would actually like to see that, because in the longer term, it might just set us up for a healthier dynamic. And really, if you have a longer term view of Bitcoin, that's really what you care about. This short-term volatility ultimately just becomes noise if we're ultimately headed for higher prices down the line. So that's the way that I'm currently thinking about it. So again, if you want to see live data from our models and more, you can go to our website, claritydigital.io, link in the description. And if you like the content, remember to subscribe to the channel, give the video a like, and follow us over on X. A lot of updates for our models and more over there.